Well, markets are ending the week on a steadier note after a volatile start. Strong earnings from chipmaker TSMC lifted Wall Street, boosting hopes that AI demand will stay strong. The Nasdaq and the S&P 500 are higher, while the TSX is rebounding on surging gold and metal prices. Now, rare earth stocks jumped early in the week as China tightened export controls, sparking fresh supply fears. And with rate cut hopes rising, investors are rotating back into tech and resource stocks despite trade tensions. Well, John Eng is the CEO of Maison Placements. He joins us now. John, it's always nice to have you.
Good to be here.
Well, look, let's start with the big picture, right? How are you reading the markets right now? Are investors finally settling in after all the volatility we've seen this week? Or are we just seeing, this calm before the next storm? What's your take?
It's a seesaw. It's a flow of funds, Devan. Basically, what we have is lots of liquidity in the market. It's reacting to the latest news bit that comes out. And the reality is that there's a lot of money looking for just few places. So this is why we get the topsy-turvy markets. Volatility is a watchword. We saw where the big Wall Street banks made record amount of profits, and they feed on this volatility. So those who are looking for a conservative way out, this is one of the reasons why gold is serving as the best safe haven to be. It's a store of value.
Let's talk about that, because against that backdrop, gold has broken yet another record this week, John, driven by the safe haven you talk about and expectations of rate cuts. For investors already holding gold or considering an entry, does this rally still have legs?
Well, there's no question that what's powering gold is its classic store of value. Historically, for thousands of years, it has maintain that value, whereas currencies has not. So today we have almost a toxic combination of events that is powering investors into gold. Gold at one time was only 2% of assets. I've seen gold as high as 10% of global assets. So while we have had a move to date, we haven't seen anything yet. And I think that the best lies ahead. Now, were I an investor that had a very low cost base, there's no question that one takes profits on the way up. But to give it gold for some perspective, I was around, of course, when gold was at $35 in 1971, and in 1980 it went up to $850. That's a 2,300% move. Then when gold moved in 1999 to 252 to 1900, that's almost 650 odd percent move. Gold since then, really since 1900, has only been up like 120%. So there's a lot of runway still left. There are a lot of uncertainty with not only Trump policies, but you mentioned, the U.S. dollar. The U.S. dollar it's a reserve currency, but we have seen it before where reserve currencies have become a question mark. The pound sterling was once. So when that happens, there's a switchover. Gold is an alternative to currencies, to particularly fiat currencies. So there's a lot of powering ahead for gold.
I'm wondering what happens to gold, this current rally, right? If the incoming economic data starts showing an improving U.S. economy. I mean, we start to see something coming in with regards to manufacturing numbers. Now, I know there are a number of factors that are pushing gold, but what happens if the U.S. economy starts propping up? What happens to gold?
Well, there's no question, Devan, that there are parts of the U.S. economy are very strong, but there are parts like the consumer that it's very weak. And investors cling to the snippets of information that they can get. The problem is that the information is now so skewed. It's almost like propaganda because there's no longer the evidence that we can support some of the strength in the economy or weakness in the economy. So we're flying blind, particularly during this government shutdown. The government shutdown itself It lasted 35 days last time. We're only in the second week. There's a great uncertainty as to the economic statistics that come out. If the economy is super strong, and there are parts of it that are strong, yes, the Fed might lower rates by a quarter of 1% because they were looking at the unemployment numbers. That happens, gold goes even higher. So again, gold is not governed by just one. It's a barometer of investor anxiety, and one piece of information is not going to blow it out of the water. It's a combination.
I want to get your thought on what we saw earlier this week. I'm very interested in your insight here, John, as we wrap up. We saw rare earth stocks surge early in the week after China tightened those export controls, right? Big story there. But many of those gains have since cooled. How do you interpret that pullback? Was it just an initial knee-jerk reaction here, or do you think investors are starting to take a more measured view on this sort of rare earth sector's long-term prospects here, especially given the sort of diplomatic tensions at the moment?
I don't think investors give a pragmatic view of really what's happening. There's no question that China has the ace cards, and the ratcheting up in export restrictions is leverage in the upcoming trade talks. The reality is that China not only has a dominant factor in critical minerals, but they also have a dominant in processing. So no matter what happens, Devin, is that yes, you can find an antimony deposit tomorrow, but it won't come into production for 10 years. And then after that, where are you going to process it? You're going to have to ship it to China. China has a lock on it, and the Americans have a lock on currencies. But the reality is that it's a tit for tat. It is the beginning of a very unfortunate, lengthy trade war. It's interesting that with this tariff war, that the three biggest countries, the main manufacturing, the main exporters to the United States, Canada, China, Mexico, its biggest export, we don't have an agreement rate today. So when we look at the economy in the States, it's still not yet skewed. Yes, there's some incoming revenues, maybe 200 billion, maybe 300 billion, but really you have $14 trillion of exports. And the reality is that we've only just begun this so-called trade war, and the Americans are the big losers.
Yep. Well, thanks very much indeed. Always a pleasure to get your insights, John. That's John Ing there from Maison Placements.